Hey guys, welcome to this channel. It's your boy Sammy. In today's video, I'm going to be talking about how to do multiple time frame analysis in Forex. Now, in this video, I want you to take note of one thing, that your ability to understand how to analyze the time frame, each time frame, it gives you an edge in the market because you know when to execute your trade and exactly the time frame on which to execute that trade. Now, time frame moves on its own, like we have the daily time frame. Now what this simply means is it takes 1 day for each of this candle to be formed. Let me see what's happening here. Okay, it takes 1 day for each of these candles to be formed. Everything you see here took a day for each of these candles to be formed. And let's move down to 4 hours. Now what this means in 4 hours is it took 4 hours for each of these candles to be formed also. It took 4 hours for each of these candles to be formed. And if we move down to 30 minutes, it took 30 minutes for each of these candles you're seeing here to be actual formed. Let's say we go down to let's say 5 minutes. 5 minutes, that's the least 5 minutes. What this equally means is it took 5 minutes for each of these candles here you're seeing to be formed. So but there's something that happens with a lot of beginner traders. Is it happened to me also. So what I wanted to be trading was, if I come here to the 5 minutes, I look for potential entries and execute my trade. I got to find out that I was losing 95% of the time. Because why? I wasn't doing the right analysis. Now the right analysis I wasn't doing was coming to the higher time frame to know what the market is talking about. I was always going down to the lower time frame. Now for the sake of this video, I'm going to be analyzing this market from the daily time frame. Now what's happening here in the daily time frame? Odd USD is actually on the bearish move. Okay, let's start from the weekly time frame so we can just get this out. Weekly, that's the highest I go. At least for the week, I got to understand what the market is doing. It gives me an edge. Okay, this is the weekly time frame, and as we can see here, odd USD is actually bearish. Odd USD is actually bearish. Now a bearish market condition is a market that's giving us a higher high and a higher low. Sorry, a lower high and a lower low. That's for the bearish market condition, a lower high and a lower low. And we should be looking for entries once the market moves up in the swing high. Now let's say for an example here, let's say market does something like this. Okay, let me easily point this out to identify the market trend, that it is actually in the bearish move. And if a market does something like this, okay, get this out. This is swing point, is a lower high. This zone here where the market came up to was a lower high. So it's supposed to be moving and giving us a direction like that. Let me get this stop out. So I just wanted to know the initial trend of the market. We know that the market is bearish. So what do? We go down to the daily time frame, and we understand equally that this market is actually on the bearish move. Now what do I mean that the market is bearish? The market has been moving down here. Let me point this out. Market has been moving down in this direction. This gave us the way I drew this rectangular line is actually a resistance zone. So the market broke this trend line. Actually there was a retracement up here. So this trend line you're seeing here is actually a retracement that came actually to this zone. into yeah. See, this was actually a resistance zone again to take price still to the downside. But some folks be like, whoa, this market has changed structure and it's actually bullish. Let's look for opportunities to start buying. Yeah, but I want you to know that you're buying on the retracement. What's happening here? It's actually a retracement to this zone here, where price comes actually to this resistance zone to close some of their positions and ride price to the what, to the downside. So we can see here that the market is actually bearish. Now another thing I want to outline is this. We know that the market is bearish. We know now from the higher time frame that the market is bearish. Now what should we be doing? It's simple. We should be looking for sell opportunities in the higher time frame, in the lower time frame, sorry, so we can look for entries to take the market to the downside. Now let's see what we mean by time frame, multiple time frame alignment. Now this actually is showing the structure of this market that is bearish. Now if we go down to 4 hours, we want to be seeing exactly that we saw there in the market. So I drew my trend line actually from the higher time frame, which happens to, I drew it from the H4. I think I drew it from the H4. So as you can see, this was the same structure we saw in the D1. Now if we move back, we can see the resistance zone. Let's see if we can see it in the 4 hours. Come. Okay, this is actually the resistance zone that we saw in the daily time frame. Now we are seeing the same resistance zone in the 4 hours. Now what this simply means is that this market is actually in an alignment between the daily time frame and actually the 4 hours. Now let's move down to 30 minutes. I always use 30 minutes for the sake of this video. I'm going to be using just few market trading opportunities in the higher time frame down to the lower time frame, market time frame alignment. So this is the 30 minutes, and the same thing we saw in the daily time frame is actually what we're still seeing here. Actually the same thing we're seeing here. Brighten this up. So see, let me see if I can take it back and see what's happening. Okay, I think this thing is very slow because of the network. Let's see. Now let's see what this goes beat. Now we've seen that the market actually in the 4 hours. Now let me quickly identify something. Now your ability to understand what the market is doing in the higher time frame gives you a signal that when the market comes to your POI in the 4 hours, you want to look for potential entries to take the market to the upside. Now for the sake of this video, I'm going to be analyzing this stuff here. These are odd USD. It has actually been on the retracement, so let's see what we can get here. See, I drew this trend line hoping that when the market comes to this trend line, I'm going to be looking for an opportunity to sell. Now this is what I'm going to be doing. Now once the market comes to my POI, which is this trend line, I knew it's bearish, so I waited for the market to break this trend in the higher time frame. I'm going to be looking for opportunity like this. Let me get this brush. So market came to my POI. POI now simply means your point of interest. Now what this connotes is your trend line. Once the market comes to that trend line, you want to be going down to the lower time frame to look for an opportunity to take that market to either the downside, which happens to be the higher time frame. Now this market is actually in the bearish move. Let's go down to the 30 minutes and see what happened. Now once you come to the 30 minutes, there's something you want to be hoping to see. You just don't want to look for opportunity to just enter the market like that. There's something you want to be seeing here. Okay, There's something I always look out for. Now it's trend line break. That's my number one rule. I look out for trend line break. Lately I see that trend line break. I know the market is about to move in a different direction now. Now let's see what happened here. If we go with what we're looking for, this was the last swing point. So you place your trend line on that last swing point and you draw the market, making sure that the market is touching two other swing points. Now the two swing points the market is touching here is this. The market is touching this, and it's, let me take this out, it's equally touching this. Sorry. See, the market came to touching three major swing points, and now what did we see? We saw a draw out of liquidity here, and the market retraced back to this zone here. This zone here. It traced back here. Now don't forget, this is what we are seeing here. This whole move here gave us a double top. It gave us a double top. Sorry. It gave us a double top. See? So now double top connotes that the market is about to move in what opposite direction. So all we have to do is look for opportunity here and ride the market to the what, to the downside. And ride the market to the what, to the downside, meaning we are bearish in this market. And now don't forget, what I did was I did my analysis from the 4 hours. I did my analysis from the 4 hours. Now if the risking here will be too high for you, what you have to do is you can go down to the 15 minutes, and that is where I advise traders to always use, except you're a scalper and you're using 5 minutes. But if you're a day trader, you want to be using the uh, the 15 minutes to get a potential entry and risk low here. See what we're seeing here was a different, we got a triple, sorry, let me get this out. Got a triple top, which connotes the same thing, that the market is about to move in an opposite direction. So we want to be looking for entry here to ride the market to the what, to the downside. But the first thing we did here was getting our analysis from the 4 hours. We got to look the time frame from the weekly. We went to straight to the weekly and we got our analysis from the weekly time frame. We went down to four to a daily to know what if the same movement the market was giving to us, and it was what confirmed that it's the same. And we went down to the 4 hours. 4 hours, that was where our POI came out from. Now the point of interest here, like we said earlier, it connotes of the fact that you're looking for market to come to the trend line. Now most folks use a moving average, but for me I like using trend line. Now trend line oftentimes work for me. Now forex market is about what works for you. It's not about what other traders are doing, because your risk level is different from the next trader, and your capital level also is actually different from the next trader. So what you want to be doing is looking for what works for you. Now for me, trend line works for me all of the time. It works for me. Now let's take a look at another market, USD Swiss francs. I've been trading this shit for a long time now. I think over weeks now. Over weeks now. Sorry. For some weeks now. There's something I've been doing. I'm going to be showing you in this video. Okay, now what we're seeing here, let's go to the daily time frame. What are we seeing here? What are we seeing here? What are we seeing here? Let's start from the daily time frame. Good. Now this market has been crazy. It has been crazy. Now I got something like a triple top at the top, and market actually came down. We're expecting this market to retrace though, but something has been happening here. I came to the 4 hours and I saw some crazy move. Though I know the market is still bullish, but I took advantage of what I was seeing here. Now, what was I saying here? I saw market coming to this trend line to consistently respect the zone before the breakout. Before the breakout that happened today. This breakout actually happened today. Before the breakout that happened today, I actually saw price coming to respect this zones here. Now, if you take a look at these zones, let's go to the 4 hours. Let's go to the 4 hours. See what I'm showing you. Now, 4 hours giving us the same thing. Actually, the same thing. Now, what did we see? What did we see happen here? We saw market come to this trend line series of times. Now, let's say 1, 2, 3, 4, up to 5 times. Now, if I want to be doing some shit here, I know this market has been respecting this trend line. What I'm going to be doing is good. Let's say the market respected it the first time, and the second time it came to the same zone. I'm going to be looking for opportunity here. And what do? This is my POI. My POI means I'm going to be waiting for market to come to that trend line again. So what I'm going to be doing is I'm going to get in the, let's say the market came to this trend line again. Now what I'm going to be doing is simple. It's very simple. I'm going to be going down to the lower time frame, the 30 minutes. I always like using the 30 minutes because it gives me a win rate. If I go down to the 15 minutes, it might break structure, and some of the time it might not be really true, but the 30 minutes is always confirmed to be true. So that's why I love using it. Let's see if we can point that out. Come on, come on, come on. Almost there. Okay, what did we see here? We saw price actually did something like this. It gave us something different. It gave us there was a trend line break. Let me take this out for the sake of this video so we can be clear on it. Okay, let's look for the trend line break. The trend line break actually indicates that the market is about to move in a different direction. So in case you're wondering why I'm always using trend line break in the 30 minutes, it's because it shows that the market wants to move in a different direction. So good. What did we see here? Sorry, what did we see here? Okay, there was a trend line break. So the market actually came back to this trend line. I don't know why this thing is not moving. If I were to move this out. Okay, so the market actually touched this trend line like 2-3 times. So as you can see here, we got a triple top, and the market broke and gave us an entry here. Now this was the reversal entry. Let me zoom this out. See, this is the reversal entry for us to get a potential entry to ride the market to the downside. So this multiple time frame analysis, it works all of the time, because most of the time when I started trading newly, what I used to do is I just go down to the 5 minutes and just look for opportunity to like get involved in the chart and just look for market structure change, a double top or a triple top or a head and a shoulder, and I just get involved. Whoa, it moves like 2-3 pips, and all of a sudden the market reverses and I'm losing a lot. And I was beginning to wonder what's the problem happening, what was happening. But I got to find out that there was something that I was not doing, and that was what time frame analysis. Now I hope this video is helpful. In case you have any comment or question you want to ask us in this video, you can click in the description below and just leave your question in the comment section below, and we'll give attention to you. Maybe we say it. Now another thing I want to say, the key takeaway is the higher time frame and lower time frame move in alignment most of the time. So The most times where you want to be gaining profitability is your ability to understand what the market is doing in the higher time frame. Then go down to the lower time frame, the 4 hours, and look for your POI, point of interest, which is the trend line in the case of this video, and look for opportunity. Let's look for opportunity in the 30 minutes. Wait for market structure change. Head and shoulder, triple top, and go down to the 5 15 minutes. If you're a scalper, 1 minute or 5 minutes. And if you're a day trader, you can go to the 15 minutes and just look for market candle reversals. In case you haven't watched the video I talked about market structure, you can actually click on the link below and you get access to our video. It's there. The link is going to be there in the description below. So that's all for this video. Hope you find value.